Conference, President Joe Biden said European allies are prepared to cut investment to China if it keeps up its support for Russia, offering a warning after NATO accused Beijing of enabling the invasion of Ukraine.
That's right, Tim. He also reiterated that the United States is very committed to NATO, basically, bottom line. Earlier on Bloomberg Surveillance, NATO Secretary General Stoltenberg stressed, too, the ties between the U.S. and its European allies.
The United States will remain a strong NATO ally because this also makes the United States safer and stronger. The United States is big, 25% of the world's GDP, but together with NATO allies, we are 50% of the world's GDP.
Okay, that, of course, is NATO Secretary General Stoltenberg earlier on Bloomberg Surveillance. I do want to point out, too, there's a new story on the Bloomberg that says whether it's Joe Biden or Donald Trump, Europe knows it must stand alone. So we want to get more on NATO, the role of the U.S., how the questions around President Biden's presidential run are, Tim, impacting it all.
We welcome back Angela Stent, Senior Fellow at Brookings Institution, also the author of Putin's World, Russia Against the West and With the Rest. Dr. Stent, also Senior Advisor to the Center for Eurasian, Russian, and East European Studies and Professor Emerita of Government and Foreign Service at Georgetown. Early in her career, Carol, she was a National Intelligence Officer for Russia and Eurasia at the National Intelligence Council and also served in the Office of Policy Planning at the U.S. Department of State. We're done with the interview. We ran out of time.
Angela, you're always so impressive. Thank you for coming back. What's top of mind? NATO, U.S., Europe, Russia, and President Biden's political future. Where should we start? It's a lot.
Well, we can start, with the NATO summit, which from the point of view of the Ukraine-Russia war was as expected, was successful, presented unity, continued support for Ukraine, said that there would be a bridge to NATO membership, although it's not clear what that bridge is. We're setting up a new NATO command in Germany, in Wiesbaden, to support Ukraine. 700 people there. NATO's sending a civilian officer to permanently be stationed in Kiev to advise the Ukrainian government on different things. So there was a lot that was signed, that was promised, that was to Ukraine. A Ukrainian president was there. But as you intimated, hanging over this NATO summit for the allies was the question of, after January of 2025, will the United States still be committed to NATO? And we know that some of these NATO leaders that were in town for the summit were also meeting with some of President Trump's foreign policy advisors to try and get a sense of the lay of the land. But there's a lot of uncertainty. And now some of these Europeans are saying we have to conceive of a world where Europe is without the United States as it contemplates its own security.
Well, Angela, to that point, just this is an anecdote, but on the subway this morning, I opened the New York Times app, as I always do, and I saw in the app that there were, I believe, 7 or 8 stories about the press conference last night and about what Democrats are thinking when it comes to Biden's re-election chances. Not one of those stories was actually about the substance of what happened at the NATO confab. And I think, and my question for you is, how this is not a knock on the New York Times, no question this is what people are interested in and what this is dominating the conversation in Washington and abroad as well. My question for you, Angela, is what does it mean for the international community if this is the focus right now and we're not focused on the NATO confab?
Yeah, I mean, there was precious little in the news about the NATO conference, which was 75th anniversary, lots of preparations, supposed to show the strongest alliance in the history of the world, but it was so overshadowed by President Biden, his state of health, and the future of democracy in the United States, which is a shame. Because this was an important summit. As you said, it's the first time that NATO explicitly criticized China for its support of Russia in this war. The Chinese were not happy about that. There was a meeting with Asian allies, Japan, South Korea, Australia, New Zealand, and NATO and the Asian allies are now cooperating more because obviously the Ukraine war and also the challenge from China, they're very much interconnected. All of those things were really overshadowed by this question of what's happening domestically in the U.S. And, I did watch the president's press conference yesterday, and on the substance of what he said about foreign policy, particularly Russia, Ukraine, but also China, the Middle East, that was all very coherent and good. But as you say, people are focusing on the style and his attitude towards everything instead of focusing on the subject.
So our story on the Bloomberg at 2:27 p.m. Wall Street time here is whether it's Joe Biden or Donald Trump, Europe knows it must stand alone. Is that how you see it, no matter who is in the White House come November, that is increasingly a Europe on its own versus really working with the United States?
I think that's a little over-dramatized. I mean, I think if a Democrat wins the presidential election, there will be continuity. I think there will be more pressure on the Europeans to spend more on defense. But in a way, the Biden administration has been successful in persuading many of them to do that. And so many of these countries are now spending more on their own defense than they were before. But obviously, if you think about NATO, the U.S. is the biggest contributor to it. If President Trump wins the election, then I think there are very serious questions about what will happen to Europe and the U.S.-European relationship. We know that he seriously contemplated pulling the United States out of NATO when he was president. And even though the Congress has passed legislation trying to make that impossible, if that's what he wanted to do, he would probably do it. Now, there are some of his foreign policy advisors. I mean, there are different people. We don't know who would get what positions, but some of them, I think, and Senator Vance, for instance, I don't know whether he'll be the vice presidential candidate or not, or what position he might get. He's been explicit that we should stop giving money to Ukraine. Right. We should make the Europeans do much more for their own defense. So I think to say that Europe's going to be on its own definitely after January 2025 is overly dramatic, but I think there's certainly grounds for concerns in Europe that are quite well founded.
Angela, we have about 2 minutes left. I have two quick questions I want to get to with you. First up, the relationships that we are increasingly seeing between Russia and India, Russia and China. There's a lot of jockeying that seems to be going on. Are you still worried about Russia and Vladimir Putin and his kind of longer term intentions?
Oh, I certainly am. I mean, I think we in the West thought they would try and isolate him after this war broke out. And of course, he's less isolated now than he was when the war broke out, and even arguably before it. So you can see a country like India feels it's very important to maintain that relationship with Russia, irrespective of the war and irrespective of the fact that U.S.-Indian relations have been improving. And to go to Russia just before the NATO summit began and on the day when Russia bombed this children's cancer hospital in Kiev, not that Prime Minister Modi would have known that before he went. It's still, it says something about how Russia has managed to utilize this war to its own benefit.
Angela, 40 seconds left here. Why should U.S. voters care about NATO and U.S. involvement?
Because if Russia succeeds in Ukraine, and if Russia then sets its sights on some other country, we should remember that twice in the 20th century, the U.S. was forced to support Europe in a war because in the end, it does threaten U.S. security if Russia makes huge strides on the European continent. It does affect us. We can't separate ourselves from that continent.
So appreciated you finding time for us on this Friday, and as you always seem to do. Angela, thank you so much. Have a great, great weekend.
Dr. Angela Stent, Senior Fellow at Brookings Institution, also the author of Putin's World, Russia Against the West and With the Rest. Dr. Stent, also a Senior Advisor to the Center for Eurasian, Russian, and East European Studies. She was a National Intelligence Officer for Russia and Eurasia at the National Intelligence Council, and also served in the Office of Policy Planning at the U.S. Department of State.
Sorry, a little tickle in my throat there, but so glad we could get some time with Angela on this Friday. Hey, folks, you've got equity markets still rallying on this Friday. We're just rolling over, so we're off our best levels, but nonetheless continuing to see gains on this Friday.
Up next, we're going to drive to the close with Dana Dioria of InvestNet. First up, though, a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden will be looking to shore up support in the battleground state of Michigan today. He's holding a campaign event there this evening. He showed his strength on foreign policy last night, but still made a couple of gaffes. Senator Jim Clyburn appeared on NBC's Today Show and says Biden has his full support.
I am all in. I'm riding with Biden no matter what direction he goes, no matter what method he takes. I'm with Joe Biden. And if he were to change his mind, I'll just answer the question that I will be all in for the vice president.
Senator Clyburn again on the Today Show. Republicans like Senator John Cornyn say going with Kamala Harris at the top of the ticket would be like rearranging the deck chairs on the Titanic.
The polling that I've seen indicates that she's about as unpopular as President Biden, so I don't think she's exactly a powerhouse alternative.
Cornyn says Harris has been the administration's point person on the border, which would doom her campaign. President Biden's executive order promoting access to voting is being challenged in court. Bloomberg's Amy Morris has more from Washington.
Texas Congressman Ronnie Jackson, along with the nonprofit organization America First Policy Institute, filed a lawsuit in a Texas federal district court accusing the executive order of, quote, encroaching on responsibilities that the Constitution leaves to the states, and saying that the order commandeers every federal agency to use taxpayer money to create voter registration programs and design get-out-the-vote initiatives. The plaintiffs claim that is an attempt to elect Democratic candidates. The executive order states it is designed to ensure all Americans, including those with disabilities, the elderly, and people of color, will have access to vote. In Washington, Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, NASDAQ 100 index. We'll throw in the Russell 2000 as well. All pushing higher right now. 20 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a bid right now as the S&P 500 hits a new all-time high. The Dow's currently up 342 points. S&P's are higher by 45, while NASDAQ rises by 0.9%. The U.S. 10-year yield at 4.18%. Gold is little changed. Oil trading in the red. And Bitcoin, that's low by 0.6%. Among the main 11 S&P sectors, only telecom was in the red. And leaders to the upside in the Dow, Intel and IBM, while JP Morgan fell 1.4% after earnings and led to the downside. Also after earnings, Wells Fargo dropped 6%, Citigroup fell 1%, and in the telecom space, AT&T disclosed a massive hack of most mobile users. Wrapping things up, Barclays changes their forecast to 2 Fed rate cuts from 1 this year. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Have a great weekend, and to hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Oh, in our next lifetime, we're going to do Bloomberg Business Week.
After dark.
After dark, and that conversation we just had about drinking water before you go to bed. Don't do it.
No, just stop
I'm just going to leave it there. Having said that, more importantly, what our Bloomberg audience really cares about.
Not that.
Tim's like, please, Master, stop while you're ahead. We've got a rally underway, but we're rolling over in terms of our best levels. So we're not seeing 1% gains anymore on the S&P and the NASDAQ, but still up about 0.8%.
18% on the S&P 500 exactly so far this year.
Yeah.
That's a rally.
Yeah, and that's why, some would say, you pull up something like RSI and you see some overbought indices or indications. Certainly you see that on the S&P 500. So, yeah, relative strength index.
Okay, so let's see what Dana Diorio has to say about that. Dana's co-CIO over at Envestnet. She joins us from Pennsylvania. By the way, Envestnet, in the news cycle itself, just yesterday, Bain Capital and Reverence Capital Partners said they've agreed to take Envestnet private, accentuating the extent of investor interest in software firms exposed to wealth management. That offer values Envestnet at $3.5 billion on an equity basis and at $4.5 billion, including debt.
All right, we know you weren't probably at the signing of the deal, but we have to ask you, does it change your world at all, or what does this mean? Because we see some deals kind of happening, whether it's, acquisition, deals being taken private. We talked about it with the big banks today, that some, the bankers are doing stuff. How does it change your world, Dana, if at all?
It doesn't, right? So, certainly we're go forward with business as usual, carrying forward the vision that we've had. And I think that's why there's the interest in us to begin with. The platform, the Envestnet platform, has done a lot to put together a financial ecosystem for retail advisors and their clients. And that's going to be increasingly important as we move forward. And I think there's just interest in that, that value proposition that we've had out there and continue to have out there. We've done a lot of the work, to kind of put together these pieces of the system that we've both built as well as acquired. And, I think they saw the value prop there, frankly.
Yeah. All right. So good to kind of get your view on it. Having said that, really interested in your view on kind of where we are in the markets. Our most read story on the Bloomberg, we talked about some of the strategists that are out there that have bearish views and that are potentially kind of being pushed out maybe, or I shouldn't say that, but just it's very hard to be a bear in this environment, to be fair. And it harkens back to 1999, another environment where we saw irrational exuberance perhaps in the market, and then you saw it come undone. Is it, how do you think about it? Because markets don't just only go up. We know that.
Yeah, well, I think what you're seeing right now is some breadth in the market. So when you think about the idea that markets have gone up and the 18% rally, But I mean, of course, that's market cap weighted, right? And really, if you dive under the surface, if you're sitting in something market cap weighted or low tracking error to market cap weighted, it's been a great ride this year and last year. But if you're in a more of an equal weighted type of a framework or something tilted more towards lower price value stocks or small caps, it hasn't been as much fun. And, you know, you haven't experienced a lot of that uptick. So I think, you know, now this last, you know, obviously the news around inflation was very good for markets in general, but small cap stocks in particular, finally catching a break because being more interest rate sensitive and also not being richly valued in the way the large cap peers are, you're actually starting to see some breadth. So I'd say, you know, is there room in the rally now for some other participation? That being said, of course, we're going into an election season, expect heightened volatility. Yeah, it doesn't surprise me at all that you're starting to hear chatter now for, well, hey, maybe some of this is going to catch up with us. It can't all go up. We're very richly valued on a market cap weighted basis.
So what do you mean catch up with us? Like what part of the valuation catches up with us? Is it that earnings don't match what investors expect? What is it?
Yeah, so I mean, I think, you know, we were looking at the standard 60-40 model and something like the 97th percentile of valuation, right, where a lot of investors sit. I think when you're priced to perfection and you're also very top heavy and concentrated on those largest, growthiest companies in the market, we all know there's a reason technology and communications are leading the way this year, right? It's these magnificent 7 stocks. It's this story around AI and growth. And yes, that thesis could certainly prove out, and we continue to have earnings that support that level of valuation. But there is at some point a question of, you know, do we have a dip in that story? Do we start to realize that AI is going to take a little bit more time than we hoped to be transformative? Is that, you know, is there a pullback expectation of something like that when you have so much concentrated in one thesis and one small part of the market? I'll say small from the standpoint of number of companies. Certainly there's room for, you know, concern there. And then, you know, going back to why is there a little bit more exuberance in the market around other parts of the economy? Of course, you know, the idea that we're finally going to get those rate cuts, you know, and we've had a fairly hawkish stance from our Fed, right? You know, the notion that perhaps we could even get a cut in September, at the very least, a signal of a cut by September, I think is starting to bring other parts of the market into the game.
Did yesterday's inflation report, did that change your view of timing of a cut?
Well, I mean, I think for a lot of people, it obviously brought the thought that it's going to come in September. You know, maybe the expectation was that the Fed would wait until after the election. Now I think a lot of people are expecting that it would happen in September. I would say from my standpoint, it made me think September is certainly much more possible. I do think also the Fed may just signal in September, you know, or I don't think July is in play yet. And it may just signal it plans to.
Yeah, Mike McKenzie told us that today earlier too.
Yeah.
Yeah.
Hey, Dana, what I really want to find out from you is I'm looking at the Russell. It's up about 1.3%. It was up 3.6% yesterday. It continues to see a fair amount of momentum, to say the least, this week. So as you say, this broadening out, got new money to put to work. Where do I put it?
Yeah, I am a proponent of, you know, looking at those areas of the market have been ignored. I know valuation does not seem to matter, you started with, it's hard to be a bear in this market. I'll say it's also hard to be a value investor. But nevertheless, I think, look, if you have money to put into the market, I'm taking the assumption you've already got a big chunk of money in the market. That's your standard investment. It probably looks market cap-esque. And that means you've got a lot of large cap growth tech already. So you may love the AI thesis. You're already very heavily betted on that thesis, whether you know it or not. I would put it more towards area of the markets that have been ignored, that are not, you know, small caps in particular, right? Small value tend to outperform over time. These areas of the market are lower than average in their valuations.
All right, we're going to leave it on that note. Dana, thank you so much. Dana Dioria, co-CIO over at Envestnet, joining us from Pennsylvania. The Russell is up more than 6%. Russell 2000 up 6% this week. If I look at the S&P 500, just shy of 1%.
It's a broadening out of the rally.
Yeah.
Yeah, that recalibration yesterday.
Though? Does it continue?
I don't know.
I don't know.
But I knew the answer to that.
Makes earnings so important.
It does, especially for those small companies.
Yeah, exactly. But from the large cap, do they live up to those expectations? All right, folks, we've got the close coming your way in just a moment, right here on Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellett, 3:53 on Wall Street, 7 minutes to go ahead of the closing bell. Stocks trading at records, bank earnings front and center today. Ahead of reports next week from PNC and U.S. Bancorp. PNC, by the way, up now by 0.3%. U.S. Bancorp moving higher by just about 0.6%. This morning, though, we heard from J.P. Morgan Chase, Wells Fargo, Citigroup, those stocks all trading lower. Chris Marinak is Director of Research at Janney Montgomery Scott.
I think as we transition into next week with the rest of the with the regional and national banks, I think we're still going to see reasonably good results. These companies are raising a fair amount of equity each quarter with retained earnings, and tangible book growth was really strong at JPM this quarter, also positive at Citi and Wells. So we really like what we see overall.
Chris Marinak of Janney Montgomery Scott. Now, Citigroup saying costs for the year are now likely to be at the high end of the range it previously provided after the bank faced a series of regulatory penalties in recent months. Citigroup shares, though, they are down 1.6%. Other banks moving lower today include J.P. Morgan Chase. It did report record profit as investment bankers and equity traders of the biggest bank smashed expectations. The bank also took a multi-billion-dollar gain tied to a Visa share exchange. JP Morgan Chase, though, down now by 1.5%. Wells Fargo, meanwhile, is warning it will not be able to cut costs as fast as it previously forecast this year after the banking giant posted higher than expected expenses in the second quarter. Right now, we've got shares of Wells Fargo trading lower by just about 6%. Up next, we are among the financials next week, Bank of America, BlackRock, Schwab, Goldman Sachs, and Morgan Stanley. And those are the company stories we're following. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, just got a few minutes left in today's trading session, getting ready to head over to our TV colleagues, and we will wrap up the trade for you, not only on this Friday, but also for the week overall. Some interesting numbers when we look at those major averages. Get into that in just a moment. Having said that, a story that popped up on our radar that we find kind of interesting.
Yeah, this one from Dow Jones, the Wall Street Journal. It's about Laurene Powell Jobs. She's a billionaire. She was married to Steve Jobs. She is paid $70 million for a San Francisco mansion in an off-market deal. It sets a record for the city.
Yeah, sellers were Sloan Lindemann Barnett and Roger Burnett. They bought the Pacific Heights home for $33 million back in 2011. Sloan is the daughter of billionaire George Lindemann, and Roger is chief executive of health supplement maker Shakely.
Yeah, the property wasn't publicly listed for sale, but the Barnetts had quietly shopped it in recent years. That's according to people familiar with the situation. They had initially wanted more than $100 million for it.
So she got it on sale, actually.
She did. Yeah, it's a cool $70 million. Check out who the neighbors are. It's near the Presidio. Orca billionaire Larry Ellison has
property
a place
owned by
there.
Him, right? Next door. Yeah.
Yeah, I should say property because we don't know if he's there. He's in Hawaii a lot.
Yeah.
Johnny Ive, the famed designer behind some of Apple's most famous products, owns a home on the same block. Again, I'm reading from the Wall Street Journal.
House dates back to 1916. I love old homes. According to the real estate data from
Did you look at
Property
this
Shark.
one?
I haven't looked at it
You
yet.
do love old homes.
I
so
do. I love
this one wasn't on your radar. It didn't pop up on your homes you might be interested in on
Remember
Zillow.
we talked about being affluent
Yeah.
before?
Well, this is more than
The
a
French Riviera.
$16 million home in the French Riviera.
It's apparently the Barnetts did extensive work to the property, according to those in the know. Measures around 17,000 square feet. I bet it has some great closets. I'm just guessing, at least when they bought it, though it's unclear if any changes have been made to the size of the house. I bet a few walls were kind of knocked down. You know how everybody loves everything open nowadays.
Okay, so Laurene Powell Jobs, she's got a great collection of homes. I can say it's great because I assume a $94 million home.
California, too, you are from California.
Yeah, not from this part of California. $94 million for an oceanfront property in the Paradise Cove area of Malibu. It's next to a property she already owned. And then she was linked to a $16.5 million purchase of a home in the Russian Hill neighborhood of San Francisco a few years ago. Yeah.
70 million.
Yeah.
That's what it buys you. Anyway, some cool stuff. This is from the team over at the Wall Street Journal. Anyway, it's among our most read stories. All right, folks, do not go anywhere. We're heading over to our TV colleagues. We're off our highs of the session, but nonetheless, we've seen certainly stocks move higher on this Friday. We wrap up the day and the week. That's because closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you to the closing bell. Our global simulcast starting with help from Scarlett Fu, Carol Massar, and Tim Stenivek in the radio booth.
They're back.
As we welcome our audiences across all of our Bloomberg
Did you
platforms.
miss us?
We did miss you, and I hear that both you guys are a little under the weather. So if it's okay, Carol, I'll do all the talking for you. Is that all right?
Oh, like it's anything different from before?
It's a day that ends in Y.
I'm just going to say we brought some of the green home to Wall Street. That's all we're going to say. Because we see pretty broad-based rally, guys.
Yeah.
Yeah, go ahead, Romaine. I thought you were going to talk.
Carol, you set it up for me here. But we talk about those moves here, and the idea that you did get that rotation this week, a rotation that I think a lot of people have been pining for quite some time. I guess the big question is this going to be one of those situations where it all unravels when we come back on Monday?
Yeah, but the data confuses me because you have consumer price prices, of course, cooling. That's what we got earlier this week. But then today we got wholesale prices that rose more than anticipated. So how do you square that?
Well, yeah, and we were talking earlier about how UMich came in lower, but then the inflation expectations also came in lower. So some of these things may not quite be adding up. But guys, I gotta say, it's really hard to sort of poo-poo the rally when the Russell 2000 is still having an incredible day. Like, yeah, it's off its highs, but still, it's up 1%.
I'm glad you brought that up.
Incredible week, too.
Yeah, because what did you say, Carol? 6% for the week?
6% for the week overall.
Yeah, so a big rotation yesterday out of the mega cap tech names and into those small caps.
And we should point out on a weekly basis, it looks like it's the strongest outperformance we've seen from the small caps going back to April of 2020. Of course, a lot of that aided by the big drop that we had in yields, a big drop in the dollar as well on the day and on the week. As for the day, here are your numbers. A Dow Jones Industrial Average in the green, higher by 0.6%. An S&P 500 in the green, higher by 0.6%. A NASDAQ Composite also in the green, higher by 0.6%. Your outperformer on the day, trying to separate itself, is the Russell 2000. A 1% gain on the day. Mid caps and transports also higher as well.
All right, so I'm just looking at the Russell 2000 since we're talking so much about small caps. Most names in the index today, over 1,400 to the upside. If we go to the big caps, Scarlett, same thing. It's pretty broad-based rally. You've got almost 400 names to the upside in the S&P 500.
Yeah, absolutely. Very broad-based advance. Look at the 11 sectors. The only sector in the red right now is communications services, which admittedly is fairly big because you've got names like Facebook in there, or I should say Meta, but it's not one of the decliners. You've got Netflix and Paramount dragging that particular industry group lower. As for the big gainers, consumer discretionary, materials, and technology all up by at least 0.9%.
All right, let's get to some of the individual gainers, if I may, in the Friday trade. I know we talked a lot about, obviously, the big banks because they kicked off the earnings season in a big way, but most of those names finishing lower today. We'll get into that in just a moment. Here's a gainer, though, in the financial space, and we're talking about Bank of New York Mellon, up about 5.25% in today's trade. It's the nation's oldest bank. They reported second quarter adjusted earnings per share that came in ahead of consensus estimates. So investors kicking that one to the upside. We saw a lot of movement in the EV space when it comes to some of the share names. Tesla, a gainer in today's trade, up about 3%. It was a top gainer in the NASDAQ 100. That's despite a UBS downgrade on concerns that the company shares have risen too much too soon, on optimism over its AI plans. There was a lot going on, but nonetheless, this analyst cutting it to a sell. 12-month price target was raised, though, to 197 a share. So very interesting. So nonetheless, though, Tesla now performer in today's session. I mentioned the EV space. Here's another one that saw some move to the upside. EVgo, shares jumping as much as 20% in today's session, finishing with a gain of just shy of 19%. Benchmark raising the price target on the $1.1 billion market cap operator of EV charging stations to $5 from $3 a share, talking about increased charging network utilization and a recent positive shift in market sentiment. And one more, because we like the nuts and bolts when it comes to what's going on in our economy, and a great read on that was Fastenal. That company up about 2% in today's session, off its highs of the days. This company coming out and it posted inline profit and sales for the second quarter. So earnings season definitely underway here.
Okay, this one's not on my list of decliners. We do have a headline from Meta Platforms, which did finish the day down by 2.8% today in the after hours. Not moving much, but I'm talking about it because we have a headline that Meta has removed Trump account restrictions, this according to Axios. As a reminder, following what happened in January 6, 2021, Meta Platforms, in addition to other social media companies, Twitter at the time, put restrictions on, at the time, the president's account there. You know, he is certainly the front runner. He's not the official nominee yet, but that is coming very soon. We'll continue to bring you updates on that story as we do get them. Let's get to some other movers, though. Other decliners. Carol did mention some financial institutions that did move higher. I got ones that moved lower on the day today. I do want to start with shares of Wells Fargo, which actually saw their biggest drop since last year's regional bank crisis. Second quarter results were hit by higher than expected costs. Shares today fell by just about 6%. Expenses for the quarter climbed 2% to $13.3 billion. It was higher than the 0.2 increase that analysts had expected. The vast majority of that increase coming from operating losses. Analysts also pointed out the firm's higher expense guidance for the year. Also, keep an eye on shares of what happened over at Citi. The company reported earnings earlier in the day. They did pair a rally that had taken it up 28% this year through Thursday. Shares finished the day down by 1.8%. Citigroup said that costs for the year are now likely to be at the high end of the range it previously provided after the bank faced a series of regulatory penalties in recent months. And finally, keep an eye on shares of Snowflake. I saw that Chris Palmieri was on your air a little earlier talking about that AT&T hack. Well, Snowflake shares fell after AT&T disclosed a massive hack of customer data. Bloomberg News reported that the information was illegally downloaded from a Snowflake cloud platform, citing an AT&T spokesperson. Shares of Snowflake fell 1.8%.
All right, let's get to the bond market here, guys. It's been quite an interesting week. A rally all across the curve, but it's really been that front end where you've seen consistent buying, yields down about 17 basis points over the last 4 days. And that means you got the 210 spread continuing to steepen here. You're now down negative 27 basis points. We've been in kind of a range-bound mode, but many analysts are now looking for get into positive territory. We were talking to Tracy Chen over at Brand New Wine, saying it's not the absolute level of the curve. It's sort of how fast we get there, how fast we get into that positive territory, guys.
Yeah, I do wonder if, folks that are watching certainly Bloomberg and looking at the rates environment, looking at the deal environment, like kind of all the stories that are coming out, maybe they're having those conversations not on the golf course, which has been traditionally the environment for folks to do so, but maybe they're actually having them on pickleball courts.
Yeah, so are you guys big pickleball players?
No.
I've tried it, but
What'd you think?
I don't know how you can have a conversation with someone because it's so
Are you
loud.
running all over the place? Yeah.
I know it definitely doesn't have the same. It doesn't have the same sort of vibe as golf, where you're like walking with your clubs to the next hole, or riding in a car with somebody. And it also doesn't take 6 hours like a round of golf takes me, I guess.
Wow,
but
you must be a really slow player.
Is that? I've not played golf in a long time. That's when you lose as many balls as I do, Romaine. That's how long it takes.
Yeah, well, tell me about it. I don't want to talk about it. I probably spent more on balls this past weekend than I did on the actual greens fees. But I am curious, to Scarlett's point, though, I mean, as somebody who's played pickleball a lot, it doesn't really seem conducive to conversation, at least not any kind of serious conversation.
Maybe the game goes quicker, and so then you hit the bar afterwards, and then you talk about a deal. Maybe it's something like that. It's more inclusive, right? You don't necessarily have to have.
It's also more aggressive,
like the skills.
though, right? It's more aggressive.
Or forget about this. We all work from home, but our new home is the French Riviera instead of our actual homes. Apparently, this is a thing. Rich Americans who can do a 4-day work week and then they can work from home the rest of the time, they're now buying a property in the French Riviera. In fact, home price values are up or above $16 million along that beautiful southeastern coast.
Okay, that rules us out because we can't work
We can
from
pool
home.
it. Oh yeah, we can work from home. We can set up a camera. We can pool our resources. You can get like a 1-bedroom. Bunk it up.
I'm glad the French Riviera is having a moment.
Has it not ever had a moment?
That's what I'm saying. That's what I'm saying.
Well, that's what I was confused about too, because they kept saying how prices are going up, and I'm like, was this ever cheap and affordable, like in the modern era?
And are they really working from home, or is it just a second property? I don't know. Are they sitting there at their computer working from home?
You're in the advertising
industry
industry and you're going to Con Leon or whatever that advertising conference is. Sure, you're working from home, sort of. And
I think the distinction is that London property was up 13% in the same period, but over the last 5 years, you've had the prices there up by 20%.
Well,
it's a relative basis.
We pitched the idea of doing a remote on the French Riviera, and we got quickly some messages back from our bosses
So Paul didn't like that. He wasn't super keen.
Well,
it was let's say it was even up the chain higher than that. Yeah.
And they just said, not going to happen. Cool. We tried. Anyway, guys, have a great and safe weekend. Even if it's not the French Riviera, be well. Pickleball, golf, whatever it is. Have a good weekend. We'll see you guys again, same time, same place on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenivek. Let's go to Boston now, because most industrial conglomerates have reinvented themselves by splintering into pieces and refocusing on faster growing industries. I'm thinking about a company like GE, which we've followed closely as our next guest has too.
Very different company,
Honeywell International, though, it makes everything from cockpit controls to warehouse robots, fuel processing technology, and face masks. They have been getting even bigger.
I have to say, this definitely resonates with me. My dad worked for Bendix, which was acquired by, there was a company in the middle, which was ultimately acquired by Honeywell. So it's it just kept building itself up and up. Brooke Sutherland is Bloomberg News Boston Bureau Chief, as well as author of the Industrial Strength newsletter, which you can sign up for at bloomberg.com/newsletter. She does join us from our Boston Bureau. Brooke, good to have you here with us. I love that we go into the industrial space. We spend so much time on the mega cap tech names, but there's a lot going on in the industrial space that's really important in terms of telling us what's going on in the business environment and the economic outlook overall. Honeywell, remind us of what this big company is all about and what they're up to.
Sure. I mean, it is a massive company, and like you said, one with a lot of history and a long string of acquisitions. But it had been relatively quiet on the takeover front under its previous CEO, Darius Adamczyk. He talked a lot about spending money on M&A, but did very little, as far as really substantial takeovers. Now, his successor, Vimal Kapur, has been in his job for about a year, and he has already done more large takeovers than his predecessor did in 6 years. And one of those was just announced this week, the $1.8 billion takeover of an LNG processing technology business from Air Products. And that's just been one of a string of acquisitions that Honeywell has been doing. And so there's a lot of interesting elements to this of, a company getting back into the M&A market, but it's an industrial conglomerate. And it's doing this at a time when a lot of its fellow large diversified industrial companies have been breaking up. Not just GE, but 3M recently spun off its healthcare business. Emerson has really doubled down on automation and gotten rid of its climate control business. Carrier is actually, a climate control company, but it decided that it really wanted to focus in on heating and air conditioning and actually divested a security access business that Honeywell ended up buying.
Okay, you said a string of acquisitions. You mentioned two of them just now. I'm going to read from your story. A $1.9 billion acquisition of a manufacturer of radio frequency technologies and other electronics for the defense industry. The company closed on Carrier Global security access business, which you just mentioned. Then it was in March they agreed to buy the aerospace navigation tech specialist for an equity value of about $217 million. This is Civitani V Systems. Brooke, why is Honeywell getting bigger when the other companies you mentioned, GE, 3M, and the others, are spinning companies off? Like, how is their strategy different, or how is their company different?
So one thing that's worth keeping in mind, that list of acquisitions that you did, I can't think of any other company that would be able to do such a diverse range of acquisitions in just a matter of months in so many different industries. And so this is really a quite unique strategy. And their idea is that they're going to organize the company around 3 megatrends. So that's automation, that's the future of aviation, and then the energy transition. And so all of those deals you just talked about, those fit into those 3 buckets. And their idea is, they can sort of cater to these faster growing themes and give investors the best of all 3 of them. And what I think you've seen a lot of other companies do is really focus on one theme, one trend, and those tend to be the stocks that are doing really well right now. They're simple stories, they're easy for investors to understand and get behind, and they have higher growth rates, but they're not also dealing with other businesses. And so I think one easy way to explain this is, say you want to bet on the future of aviation and you think there's a long runway there for aviation to continue to rebound from the COVID slump. You might not also want to own a warehouse automation business, which has actually been, really struggling to rebound, coming off of those COVID boom days when we were all ordering so much stuff to our houses. And you might not want an air conditioning controls business as well. I just think that investors don't tend to think about these 3 different mega trends through the same lens, and they also don't all tend to perform at the same rate at the same time. You have different cycles, different growth rates.
Well, Brooke, you alluded to this, but there's a great chart in your story about how Honeywell shares have lagged behind other industrial stocks and broader benchmarks. I mean, you look at Honeywell versus the S&P 500, the S&P 500 industrial sector, Eaton, Emerson Electric, GE, and Honeywell's lagged all of them.
I got to say, Brooke, I pulled them up on the Bloomberg. I mean, Honeywell is up just about 2.5% this year. GE, now very, much about an aerospace company, is up 56% this year. Eaton is up about 37% this year. They're much more, focused companies. So do investors not want these conglomerates?
I think this has been sort of a long-running trend of moving away from the conglomerate form, and it's certainly picked up pace in recent years. I do think conglomerates can be successful, and actually, despite all that's been written about the death of the conglomerate, there's still actually quite a few of them still around, and especially if you branch out beyond industrials, you look at something like Microsoft, which has cloud computing, but also the LinkedIn website, Xbox. You look at Delta Airlines, which is primarily an airline, but also has a refinery and a very lucrative credit card partnership. And its
I
own
forget
maintenance and
about
repair
that.
operation.
Yeah, we know about the credit card. Well, talk more about this refinery.
I forgot about
I know about the
that.
credit card partnership. Wow.
So there are these examples out there that are successful, and there are other industrial conglomerates too that still exist. But I think one of the things that makes it work is, you kind of still have to fit into one bucket that investors can understand, and you also have to be very active on portfolio management. And I think what that means in today's world is not just doing acquisitions, not just getting bigger, but also thinking about the businesses that maybe are less core to your identity. And Honeywell has said they're looking to get rid of about 10% of their revenues that they don't think fit into those mega trends of aviation, automation, and energy transition. But 10% of Honeywell's revenue, because they have so much revenue, is not necessarily as much of a dramatic shakeup as you might think. And so, I think the question is, do they need to do something bolder to really streamline the story for investors?
Well, I know one group that's really happy, and we saw that play out in some of the big banks, and that's the M&A bankers. They get to actually do some deals, and it's been pretty quiet. Brooke, thanks. Really appreciate it. Good story, and I love tapping into the industrial space. Brooke Sutherland, she's the Bloomberg News Boston Bureau Chief, also author of the Industrial Strength newsletter, which, as we mentioned, you can find it, sign up for it, bloomberg.com/newsletters. Brooke joining us there from our Boston Bureau.
Hey, how about the green on the screen with the market close today?
Yeah.
The S&P 500, 56.15, up half a percentage point. Off the best levels of the day. We saw a little bit of selling at the end of the day, but still a strong week and certainly a strong year for equities. This week, Carol, the S&P 500 up 0.9%, the Dow up 1.6%, NASDAQ Composite up 0.3%, but the Russell 2000 was the outlier.
Yeah, up 1% in today's session alone. We talked about a lot with our TV colleagues, but has been an underperformer, up about 6% for the week overall. But if I look at the year-to-date performance for those small cap names, the Russell 2000, up about 6%. So we've, listen, ad nauseum, right? We've been talking about how small caps have lagged. There's been concerns, but we have definitely seen investors branch out into some other names this week, and that is in particular into the small cap space. We'll see what happens as we continue to get into earnings, and we are all over the large cap, big cap names, and as it evolves over the next month in terms of the earnings season, and whether or not those names live up to some of their valuations and the expectations, and whether or not we see investors kind of move back into that space. We will watch.
Speaking of moving, French Riviera, still thinking about it?
I have been to the south of France. It's really beautiful. It's just gorgeous. And so, yeah, but I mean, it's for a certain set. That's for sure.
Hey, before we go.
But working from home, I just think it's funny that we're tying them together, and it's just kind of, it continues. Here we are, 4 years outside the pandemic, and it continues in a big way.
Before we go, there's a story that I just want to hit on because it's about JSX. It's that sort of private-like aviation service.
Okay.
That is a charter service. Travelers flying JSX and other public charter airlines from New York's Westchester County Airport are going to have to line up and pass through security checkpoints just like everybody else.
Why is that? Just a change?
Yeah, the carrier lost the privilege of using a private jet terminal at the airport when a federal judge earlier this month threw out a lawsuit filed by JSX and other companies against the county. They had sought to oppose rules requiring airlines selling tickets to the public on planes with more than 9 seats to use the main terminal. So this was one of the perks of using a service like JSX.
You didn't have to go through this stuff.
Yeah.
I don't know. Security, I think it's a good thing.
Yeah,
I'm kind of good with it.
Yeah. you went through TSA yesterday.
I did. I'll take off my sneakers or my shoes, whatever. Just keep me safe. Our thanks to Brooke Sutherland again. Coming up next, we go to Lake Tahoe to check in with the CEO of American Century Investments. That's next.
Yeah, it's 421 on Wall Street. We do check records, do check markets all day long. Records certainly on everybody's minds today. We had the Dow, the S&P, NASDAQ all advancing close to records at the close, but no record today for either the S&P or the Dow. Indeed, the Dow closing just above 40,000 to a decimal, up today by about 0.6%. S&P up 30, up by 0.5. NASDAQ, the composite index, up 0.6%. The NASDAQ 100 index up 0.6%. But the rally in small caps continued today, with the Russell 2000 up by 1.1%. That, of course, on top of yesterday's 3.6% advance. So stocks did retreat from records in the last 30 minutes of trading. We saw the S&P 500 index pair its advance. 10-year 4.18%, the 2-year 4.45%. Spot gold down 0.1%, 24.12 the ounce. West Texas Intermediate crude a pullback there, down 0.5%, 82.25 a barrel. Bitcoin today down 0.5%, 57,249. Tough day for a lot of the banks after earnings. We had Wells Fargo dropping 6%, JP Morgan Chase after earnings down 1.2%, and Citigroup down by 1.8%. Of course, a lot more financials checking in next week. Again, recapping, stocks higher, S&P up 30, up by 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
And the music's calling and we got to get down to swing down.
Well, it's kind of become a tradition for us here at Bloomberg Business Week. Each year around this time, we head out to Lake Tahoe to check in with Jonathan Thomas, the CEO of American Century Investments. He's out there because of the American Century Championship Golf Tournament. It kicks off today. The tournament, by the way, Carol, has raised close to $8 million for local and national charities. But that's just a drop in the bucket when it comes to what American Century Investments has done.
And we want to get into it because we're talking about a few $1 billion in the last 24 years. American Century Investments, though, you know who they are. They've got $254 billion in assets under management. It's got a unique model in finance. More than 40% of the firm's profits go to the Stowers Institute in Kansas City, Missouri, which focuses on medical research and the treatment and prevention of disease. As we mentioned, the firm has given more than $2 billion in the last 24 years. Jonathan Thomas is President and Chief Executive Officer of American Century Investments. He joins us from Lake Tahoe, Nevada. Jonathan, it's good to have you back with us. I think I said, say the Institute's name, because forgive me if I mispronounced it.
Oh, you were super close. It's Stowers. It
It's
looks like
Stowers.
Stowers, but it's Stowers, yeah.
As soon as it came out of my mouth, I knew I had it wrong. But we want to get it correct because you guys do have a unique model. Remind our world, I know we talked about it last time, of why you guys, do plow so much of the firm's profits into the Institute.
Yeah, thank you for asking that question. We have a model that we believe is a universe of one. And it came to be because both of our founders, Jim and Virginia Stowers, were both afflicted with cancer. And then they did something that almost nobody does while they're alive. And that is that they directed almost 100% of their net worth to making the world a better place for us, our kids, and our children's children by setting up a medical research organization that's staffed with over 550 scientific professionals. And as part of that gift, he structured our capital structure so that 40% of our profits each and every year go to the Institute. So we've been directing those assets there since you've mentioned, since 2000, 2.1 billion so far. And they do work on finding cures for cancer and other gene-based diseases. And for our clients, it's a very compelling story. In this industry, there are thousands of products, and it's sometimes hard to differentiate between one and the other. But what we offer, when people understand our story and that they know that we have strong performance, competitive pricing, and the biggest difference between us and our competitors is that we're directing 40% of the profits to medical research. It tends to be a tiebreaker fairly often.
Yeah, Jonathan, I got to ask, you mentioned the customers, and certainly, obviously, an important part of the American Century Investments story. I mean, they're the ones who bring you the revenue. But I'm wondering what it does for the culture inside the company, for people who work at the company. And look, just to be totally transparent, we also work for a privately held company that donates an extremely large portion of its profits to charity.
Yeah, your organization's amazing. What Michael's done has changed the world as well. For us, it is it empowers the culture in a way that's almost hard to believe. The CEO it's incredibly comforting to know that every single employee who joined the firm did so being keenly aware of this very unique organizational structure and our propensity, or not propensity, but hardwired structure to direct 40% of our profits there. And what it creates is creates a sense of purpose and mission in the company. And our clients, our employees strive every single day to delight our clients, because they know if they win new business, retain existing business, it actually adds to medical research. And that is such a powerful force I can't begin to tell you.
All right, so tell us about, we're looking at this gorgeous background behind you.
Oh, Lake Tahoe.
Yeah.
From the Reno side.
It looks like another gorgeous day there. Tell us about the tournament.
Oh, thank you. I'd be glad to do that. This is amazing. It's our 26 years of title sponsor. We use this as a platform to tell this exact story, so thank you for the opportunity to do so. But it is, there's just so many crazy things. We've got a quick stats for it. We have 20 active athletes. We have 15 Hall of Famers here. We have 10 MVPs, 4 Heisman Trophy winners. And so the competition, as you can imagine here, is super intense. And while this is a second sport for every single one of them, there's about 10 or 12 people that have a chance of winning this tournament. And, you know, from a numbers perspective, we'll have 70 to 80,000 people here this year watching the tournament, and over 7 million viewers online.
You know what everybody really wants to know? Travis and Jason Kelsey, my understanding, are there. Is Taylor going to be there? You know, we want to know this.
Yeah, unfortunately, I do know the answer. She is not able to make it this year. Her concert tour was booked in advance. I did speak with Travis, though, last night, and he knows that I'd love to have her here, and he would love to have her here. You know, we've had presidents here. We've had Clinton and Bush and others, and we have the security in place to handle just about anything. So I hope I made Travis comfortable last night when I told him that, and we would be super excited to get Taylor Swift here.
Hey, now that we've chatted a little bit about the tournament and what you guys do over at American Century Investments, and yes, even Taylor Swift and the Kelsey brothers.
Covered it all.
I want to get your thoughts on the macroeconomic environment, because we'd be remiss if we didn't ask you on a day where we saw new records for the S&P 500, for the Dow, how you see the environment out there.
So it's, you know, it's really deceiving. When I talk to everyday investors, you know, they hear about what the market's doing, and you know, everybody just focuses on the NVIDIAs of the world or the super high performing funds or ETFs. But the reality of it is, yes, the S&P is up like 18% this year. But if you looked at it on an equal weighted basis as opposed to a cap weighted basis, it's actually up only 4%. It's a gigantic difference. So this Magnificent Seven, which we've all been talking about all year, continues to be a force, but it is starting to broaden out. And we are starting to see, you know, the manufacturing and housing sectors have been softening for a quarter or two now, and we're starting to now see some consumer demand start to decelerate. The job market appears to be softening, and so, you know, the softy locks, if you will, landing that we've been talking about for some time, it doesn't seem out of reach, and especially as this rally, and I didn't get a chance to see the market today other than the numbers. But my sense is, from what I heard just listening to the show before I got on, is it broadened out. Small caps and others are starting to participate, which is exactly what we need, and that's great for all investors.
Yeah, small caps up 6% for the week overall, so investors definitely moving into it. Having said that, are you guys at American Century, Jonathan, seeing that specifically, that investors are saying, hey, I'm kind of done a little bit in terms of allocating new money or new assets to some of the Mag 7 companies or the NVIDIAs of this world, and I am looking to see and put money into some different places that have really underperformed?
Yeah, you know, so as an asset manager, you know, we have mutual funds and separate accounts and ETFs. And the Magnificent Seven, I will tell you, early in the year, there were a lot of questions about how much exposure did we have to them. If anything that's happened recently, it's how much exposure do we have to them, but from the opposite angle, looking not to be as concentrated as they were before. So felt to me like in the first part of this year, everybody wanted the concentration, the big seven. And now which explains why you see the market doing what it's doing, they're looking for that diversification away from it. So we're seeing uptake in both the American Century branded funds as well as our Avantis branded funds that provide that diversification.
Hey, just a quick clarification for me. For the Dow and the S&P 500, Carol, we saw intraday highs, but we didn't close at records because of a little bit of sell-off toward the end of the day.
Right. The momentum was there, though, for most of the day. So we definitely, we're talking about possibly another record on the S&P. I will say the S&P did notch a 10th weekly gain in 12 weeks.
Jonathan, before we let you go, just 30 seconds talking fees and pressure on fees right now as we see more and more products come out and more people going to index funds. What type of pressure are you seeing on fees?
So, the pressure continues. And by the way, when you said you were going to have a correction, I was really glad you weren't correcting me, which is where you were going.
No.
So on the fee side, it's been a steady decline, but, at the end of the day, it's offset by technology and AI improvements, and we're all working hard to maintain our margins. And in the end, it's great for the clients. We have this new brand of Avantis ETFs that are priced right in between kind of fully active funds and passive funds. And what we're seeing there with the products being priced between like 15 and 30 some odd bips, people are looking to get that active exposure with prices that are much closer to indexing. And so this gap, this new product set we've created seems to have tremendous appeal. We're up to $50 billion after just 4 years in that space.
That's pretty impressive. Jonathan, thank you so much. Jonathan Thomas, President and Chief Executive Officer of American Century Investments. That American Century Championship, it goes through Sunday, and it's going to be, I believe, broadcast by NBC Sports.
All right, from Lake Tahoe to Washington, D.C. for a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 Newsroom. Hey, Nance.
Hey, Tim. Meta will reportedly roll back restrictions it placed on Donald Trump's Instagram and Facebook accounts. Axios, in reporting the story, says Meta is making the change to ensure parity among presidential candidates leading up to the election. Trump's accounts will still be subject to general content rules. President Biden is in Michigan for an evening campaign event. During last night's hour-long news conference, he spoke confidently about a range of complex issues, from the tax code and trade policy to Russia and the Israel-Hamas war. He did, however, have a few gaffes, which is still worrying some Democrats. Following this week's NATO summit in Washington, questions are lingering about the future relationship between the U.S. and the alliance, especially if Donald Trump is elected president. He's made no secret he does not see NATO's value. But NATO Secretary General Jens Stoltenberg tells Bloomberg he expects the U.S. will stay the course.
The United States will remain a strong NATO ally, because this also makes the United States safer and stronger. The United States is big, 25% of the world's GDP, but together with NATO allies, we are 50% of the world's GDP.
Again, NATO Secretary General Jens Stoltenberg. The FCC and law enforcement officials are investigating a massive data breach disclosed by AT&T today. The company says hackers accessed records of calls and texts of nearly all its cell customers roughly 2 years ago. AT&T says the compromised data excludes the content of those calls or texts or any other personal information. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks ended the Friday session higher, a winning week, as the latest economic data reinforced bets that the Fed will be cutting rates in September. For much of the session, we had stocks trading in records, but in the last 30 minutes, the S&P 500 did pair its advance. S&P today up 30, finishing the week, heading into the weekend at 56.15, a gain today of 0.5%. The Dow up 247, up by 0.6%, ending the week a fraction above 40,000. NASDAQ was up 115, a gain there of 0.6%, and the Russell 2000 managed to build on yesterday's advance, up another 1.9%. 10-year 4.18%, the 2-year 4.45%. Spot gold down 0.1%, 24.12 the ounce, and West Texas Intermediate crude down 0.4%, 82.26 a barrel. So it was an update for the Dow, the S&P, and NASDAQ. As for recent market gains, Dana Dioria is co-CIO of Investnet, and she was a guest right here on Bloomberg Business Week.
If you're sitting in something market cap weighted or low tracking error to market cap weighted, it's been a great ride this year and last year. But if you're in a more of an equal weighted type of a framework or something tilted more towards lower price value stocks or small caps, it hasn't been as much fun. And, you know, you haven't experienced a lot of that uptick.
Dana Dioria, the co-CIO of Investnet, right here on Bloomberg Business Week. Bank stocks lower today after earnings, a 6% drop for Wells Fargo. JP Morgan Chase after earnings down 1.2%. Citigroup after earnings down 1.8%. The parade of big financials will continue next week. Recapping, S&P up 30, up 0.5. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, after Porsche spent years hybridizing,
oh yeah,
am I saying it correct?
You are.
It's SUVs and Panamera sedan, the $164,900.
Okay, just say $165,000, Carol. Just say
Rounded up, Carrera GTS is the first road-going hybrid 911 to leave the company's doors, and it sounds like she liked it. Let's get to Hannah Elliott, Bloomberg Pursuit's auto columnist, co-host of the Hot Pursuit podcast that she does with Matt Miller. She joins us from our LA Bureau. A Porsche hybrid. I still have to get my head around it, but help me. You're the expert. How did you get your head around it? How did they get their head around it?
Carol, you are not alone. There were a lot of 911 lovers and Porsche purists who were very reticent about the idea of electrifying their beloved 6-cylinder engine. You know, Porsche made that engine famous in 1963, and I myself was hesitant. You know, you don't know what to expect. Porsche actually removed a turbocharger from this engine, and then it made the existing turbocharger larger and then added an electric motor. So there's a lot going on under the hood. And, you know, we kind of didn't know what to expect, but I'm happy to report to you that the Carrera 911 GTS hybrid is really fabulous. And honestly, it was, in a good way, very unremarkable. It's got about 60 horsepower more than the previous version, and it's a little bit faster, but you know what? At the end of the day, you'd be hard-pressed, as I was, to even tell any difference between a hybrid 911 and the standard 911 that we love.
Hey, Carol's fighting me because she wants to ask another question. You know what, Carol? Go ahead.
No, oh God.
This is what happens.
Because your voice is a little sore
No, this is what
today?
happens when Hannah Elliott comes on. It's like we fight each other to get to talk to her. But go ahead and ask another, Carol.
Put the pedal to the metal, and how did it feel? And where did you ride it or drive it?
Okay, so I drove it on a track in Spain, which, yes, it does sound very glamorous, and of course it was great, but Spain is also a really great place to drive cars right now because the weather's fabulous, and these automakers can get the tracks there for pretty cheap. So they just have journalists come out to these Spanish tracks, and you spend the day driving it around.
Yeah, but Hannah, watch out for the olive trees, okay?
Well, it's interesting that you say that because this was a really interesting track. It had some sort of inclines, it had banking, it was over 3 miles long, so it was a really tricky track. And the car handles, it's so fabulous. You know, this is why we know and love the 911, and it's also why Porsche was so hesitant to do anything to this car. This is the crown jewel of the brand, and it engenders such a fervid fan base that anything that would change, the amazing handling, the amazing braking, just the amazing power, delivery, it's kind of dangerous. You know, you think you don't want to change something if it's working. But I have to say, truly, from a driving perspective, this hybrid, new hybrid variant, it's great. It's, you know, Porsche didn't want to tell me how many more miles per gallon we're going to get out of the car. I think it's pretty negligible.
Huh, okay.
Really, yeah, this is an interesting thing. You know, you make a hybrid in order to help meet CO2 and emission standards, which is for sure true. But Porsche is also saying, look, we're actually getting a little bit more horsepower, a little bit more speed out of combining the electric motor and the turbocharger. So it's kind of a win-win. Yeah, I will say, though, the biggest change for me were changes in the cabin. And I don't know if you guys want to talk about that or not, but
go there,
Yeah,
because right, like it's so iconic, right? You get inside a Porsche, right? The dials and so on and so forth. Tell us what the experience was like, because it sounds like that's where you were a little disappointed.
So this is where I was really surprised. The car itself, in terms of driving, it's very well within the Porsche 911 lineup. It's not the fastest, but it's in the middle. It's in the middle. Inside, though, this is really the first 911 to have a button to start the car rather than the sort of faux key fob that you go to turn on the left side, which is a really signature touch for a 911. Now they've put a button there. And Porsche has also removed all of the analog gauges. You know, Porsche has the signature 5-gauge setup behind the steering wheel with the tachometer right in the middle. They've done away with that. Now it's screens, you've got a push button start, and they also removed the back seat. Now that's now available as a no-cost option, but people who really love the 911 and spend a lot of time in that cabin, whether they're commuting to work or driving it on the weekends, you're going to notice, I think the biggest change that you will notice is inside the cabin.
Does it feel like when you drive it that you're driving a hybrid?
No. And you know why? First of all, there's no electric-only range. You know how some plug-in hybrids, you can drive in electric-only mode for a few miles? This Carrera GTS doesn't have that. You don't even plug it in to charge. This is a mild hybrid. So all of the energy is being transferred under the hood. You're not plugging it in. You're not driving in electric-only mode. So honestly, you'll be pretty hard-pressed to feel any difference in terms of, ooh, am I driving a hybrid? Other than maybe you could feel that it's a little bit faster if you're doing if you're burning rubber from 0 to 60 miles an hour, it is about 0.3 seconds faster. So you'll feel it in that way. But just from a regular driving perspective, honestly, you're not going to feel any difference.
Scale of 1 to 10, what do you give it?
Oh, I give it 8. 8. Ooh. I like hybrids. Yeah, I think, you know what? I think hybrids, we used to think they were a bit of just a bridge technology while we all accelerated toward electric vehicles. But I have to say now, the idea of some of these sports cars becoming hybridized, where you kind of get the best of both worlds, it does make sense. And, you know, as we're seeing EV sales sort of slow down a little bit, they're still growing, but just not at such a quick rate. The hybrids, to me, are looking really interesting because, like I said, it does kind of combine the best of both worlds. You get the pure power and really quick acceleration of an electric battery, but you also get that tangible, really fun driving feeling of internal combustion.
You contrast it with the Aston Martin's Vantage that you recently had on track as well, just in the last 30 seconds that we have with you. Why was this so different?
Well, 3 words: 4-wheel drive. That's why. I mean, it's just so much more predictable, and I'm the first to admit it makes me think I'm a better driver than I really am. The car is a lot more controlled.
Wow. What I also love is you called it exuberant. You like out of the gate, it sounds like you just had a blast driving it around. And it sounds like more to come. So good. So good, so good. It's a great way for us to wrap up on our Friday.
Hey, if you ever want us to come on one of these trips to Spain or like around the track,
yes.
just let us know, okay?
Hey, if you want to go on the next one, be my guest. I'll sit in the corner and drink some port or something.
Okay, deal.
Done. Hannah Elliott, be well. Have a great weekend. She is auto columnist at Bloomberg Pursuits. Check her out on Twitter, on X, on Bloomberg.com, and of course at the Bloomberg Terminal.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. AT&T shares lower today by 0.3%. Privacy and security officials say a hack that has compromised millions of AT&T customers' communication and location records undermines U.S. national security and represents one of the worst breaches of an American telecoms provider on record. Today, AT&T disclosed that an unknown hacker had compromised its network in April and stolen records of calls and text messages from nearly all of AT&T's more than 100 million customers. Again, today we had shares of AT&T declining. AT&T today was down by just about 0.3%. It did turn out to be an up day. No records, though, for the Dow, the S&P, and NASDAQ. S&P today up by 0.5%. On a day when stocks advanced, big banks declined. We had shares of Wells Fargo dropping 6%. JP Morgan Chase down 1.2%. Citigroup today down 1.8%. Gerard Cassidy is head of U.S. Bank Equity Strategy at RBC Capital Markets.
Citigroup's a turnaround story. As you know, they've struggled over the years, and Jane Fraser is now simplifying the franchise, trying to streamline it, trying to make it more profitable. She's making good progress, a long way to go. But JP Morgan has been a fine-tuned machine for a number of years under the leadership of Jamie Dimon. and those numbers show out as we're seeing today. They're very strong in, as you know, investment banking, capital markets, but they have the diversified revenue stream that is quite positive with the consumer business and the wealth management business as well.
Gerard Cassidy of RBC interviewed this morning on Bloomberg Surveillance. And those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Is standing by the president's reelection bid. South Carolina Democrat Jim Clyburn says the conversation now needs to end over whether Biden should exit the race.
I always say the best predictor of future performance is past behavior. Let's continue to compare the past behavior of Joe Biden as to the past behavior of his opponent, Donald Trump, and let that be a guide to the reactions going forward.
Clyburn was on NBC's Today Show. At least 17 of Clyburn's colleagues in Congress have urged Biden to drop out. Biden is campaigning in Michigan today. There are just a few days left to go before the Republican National Convention, and the presidential race still seems pretty close. The latest NPR and PBS Marist poll shows President Biden's support is relatively unchanged from last month, despite questions about his mental fitness. If the general election were held today, the poll found 50% would go with Biden, 48% would vote for Donald Trump. That's still within the margin of error. Last month, the same poll had the two tied at 49%. Ukrainian President Volodymyr Zelensky took his pleas for more help to the National Governors Conference in Salt Lake City today.
This is one of the most transparent battles between good and evil of our time. It's clear that Ukraine has done nothing wrong before God and people, and all the pain our country suffers is only the result of Russia.
Zelensky's speech came after NATO leaders met in Washington this week and pledged more reliable military aid to Ukraine. They also vowed to prepare for Ukraine's eventual membership in the alliance. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Carol and Tim.
All right, Nancy Lyons, thank you so much. All right, well, this story, I love this, shared by our producer, Elizabeth Cedrin, and it has to do with the U.S. Olympic gymnasts that are coming up, and the leotards they are wearing. I was a gymnast. My leotards were pretty simple, usually tan skin. They had designs, though.
Did they have crystals?
They did not have crystals, and this is the big difference.
Did they have 10,000 crystals?
They did not have 10,000 crystals. They did not cost $5,000 to make.
That's crazy.
It's crazy. And this is what they say. In Paris, Simone Biles and company will be wearing leotards decorated with more than 10,000 crystals. Go back to 2016, shortly before Biles took home 5 medals at the Rio Olympics while wearing leotards bestrewed with approximately 5,000 crystals. GK Elite, it's the company behind the Leos, announced that they had hit peak crystal. GK could not, a spokesman said, they couldn't get any more sparklers on a quarter yard of fabric. It's not much fabric that you are wearing, and it's pretty time consuming to put them on. But nonetheless, it sounds like they're getting more on a leotard.
Yeah, as Vanessa Friedman at the New York Times writes, when it comes to crystals on leotards, however, as when it comes to most Olympic feats, records are meant to be broken. She talks about the 2021 Tokyo Olympics. They wore leotards with 6,400 crystals. This year, they're going to have more than 10,000.
Yeah, the U.S. team is known for
Doesn't
wearing...
it get hard to do things
Well, I have to tell you, that to me, it would be a little bit uncomfortable, but I think however they do it, they must make it so it's pretty comfortable for the gymnasts, and that it doesn't get in their way, but I don't know. There's one called the Star Spangled Shine that's got